Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's take a look again on the euro currency. Yesterday you could see euro currency has shown this downside performance. Actually we have discussed in details possible scenarios yesterday before the consumption expenditures report in the morning, so I just do not want to repeat the same stuff here. But the performance of the euro currency seems very interesting because it hasn't played with the consumption expenditures numbers, but instead we're trading around the inflation releases in Germany and in France. Why the collapse has happened? At first glance, it should actually show opposite performance, as gold did, just because we've got weaker numbers in the United States, which suggests that inflation may be not so strong. And once again, this gambling concerning Fed policy is coming to the first stage. But instead of that, you could see the drop, and this drop is, it happens relatively rare, but it is based not on the strength of the United States dollar, but on the weakness of the euro currency. For the first time well, I don't know in what period, the euro currency starts showing the dynamic, which is based on its own problems, but not indirectly replicates the actual performance of the United States dollar. And this might be a very important moment. If you remember, within the few weeks or maybe a couple of months already, we said that the market is wrong, suggesting that the Fed will start cutting rate first. By our suggestion, that situation in Europe stands much worse, and it has more chances to starting cutting rate ahead of the United States. Besides, the United States should have done everything to let European Union start cutting rate first, just because it provides support to the United States dollar. That's what they would like to. And that currently we see the materialization of this our theory. So it stands right now. Yes, it is just the first step. It's drop not really significant, but we see that constantly inflation drops in Europe more stubbornly, I would say, and gradually compares to the United States. There we see some choppy action, 1 month down, 2 months up, and so on. But in euro, this will be straightforward downward action or inflation decreasing, which make pressure on the European Central Bank and in general in the euro currency. Currently, we still have to treat it as a retracement. It's with this upward tendency because trend remains bullish. But this retracement is coming to its critical moment. Breaking which could mean that the tendency has been broken, or better to say this upward action is over, and market could keep going within this downside action. Currently we're coming to this point. You probably already understand what I'm talking about. This is, of course, the bottom of the right arm, the hand shoulders pattern. So approximately we're still watching for this 107.90, 107.80 area, where we should get the answer on this question. And you can see this precisely has happened what we said. So although this is bullish and we thought about possible continuation, but as we said, if you're not ready to take risk of the data release, it would be better to not considering it and keep an eye on other patterns that could help you. In fact, once again, here you could see the wrong patterns forming on the retail broker chart. So if you want here MACD predictor, once again it could show you the wrong pattern. You could see trend has turned bullish. Here should be the bullish grabber actually, but in reality right there in this top moment where you have to make the decision on possible bearish entry, as we said yesterday, here's actually in reality has been formed bearish grabber. Just take a look at the performance of the futures on EUR, and we've got two grabbers, actually a single grabber right there, that's suggesting drop here. So that was very important moment. And that could actually change everything on the hourly chart, and those who were watching for possible bearish position taking, it might be a really great assistance. We said that keep an eye on this. If we will get the grabber, then probably you could consider some, if you remember, we call it as a butterfly on hourly chart to the downside. We have considered it. And this grabber indeed has been formed, although we do not see it on the retail broker chart, which is a really pity. So currently market is calling around the lows. Obviously this pattern is not valid anymore. And with the current performance, it seems that we should be ready for another downward continuation. This market probably should reach the bottom of the, to make it harmonic to the left arm. It's approximately 107.90, 107.80. It means that in the current circumstances, we're going to keep watching for this target, which we have indicated as a risk factor. And theoretically, it could be finalized with this butterfly pattern. I'm not sure that definitely will be formed, but at current moment, this market stands very close to it. Theoretically, downside continuation is possible. So once again, 107.80, 107.90 is the level that we will be watching for. Here's, by the way, those who take in long position here with these grabbers that we have mentioned, it's possible upward continuation and the FIB support. It was also not the strategy as well, because we've got at least 2 attempts of going higher. So it would be possible to move stops to the break-even once this has happened. So from that standpoint, it also was not a mistake. It's just because every time it happens, because you do not know what the numbers will be. And you just have to just get this risk if you're trading it. But in general, this setup also was not really bad. At least it was not very risky. And here it was possible to move stops to the break-even with these upward spikes this market intended to do. First was on inflation in Europe. Next spike here was based on the United States data, but later you can see this collapse has happened. So today, at this point right now, I think that's in the current moment I wouldn't consider taking new longs position, because if you'll take a look also at the dollar index right now on the 4 time frame chart, you could see that here we have a few grabbers has been formed here that's just taken out of the stop. And it means that market still could keep going higher. And recall what we said yesterday about a possible harmonic top of these hand shorts on a dollar index. We said it's probably possible only if we will get the poor inflation data in the United States. And precisely this has happened. So now market with the grabbers that we have could keep going higher. It means that on the euro currency, it also could drop below these lows. That's why in the current circumstances, it is not very attractive to take the long position considering. Maybe when OP will be reached, that will be quite different story, because on the background we will have not only this butterfly and OP, but also we will have these potential head and shorts where theoretically right arm will be formed, and it will be different compared to the current situation. When taking the bearish positions, well, theoretically you could do this, but you need to keep the close eye on the risk-reward ratio, because you can see market stands very close to the OP, and also you will have to determine where to place the stop order. Maybe it would be easy to trade it on the dollar index, because there you have grabbers, you see where you could put the stops, and just, well, maybe it will be more comfortable. That's actually what we have on the euro currency. It seems that today mostly we will be waiting for completion of the OP around 107.80, and major action should start already on the next week.